to calm down. Calm down. I'm seeing a lot of discussion surrounding Nvidia and the Nvidia stock split. And the one thing I'm not seeing talked about is to calm down. The Nvidia stock split is causing a lot of emotionally charged behavior. I'm seeing a lot of discussion and feeling of missing out, fear of missing out. I'm also seeing a lot of the other side of the equation, which is excitement. Investors that bought Nvidia stock at the beginning of the year or maybe last year, of course, they're understandably excited. They've made a great deal of money on their investment in Nvidia stock, so they're feeling really excited and enthusiastic. Regardless of the emotion, whether it's excitement, fear, anger, disappointment, regardless, whatever the emotion might be, if emotion is driving your investment decision, it's unlikely to be a good decision. Investing is often best done without emotional charge. It's not one of those activities that benefit from emotionally charged behavior. For instance, when you go running or when you go lifting weights, those activities benefit from being emotionally charged. If you're excited, if you're feeling like, you've got some energy, you've got some pent up energy, that helps you during your run, that helps you during your workout. When you feel like you're tired and you're about at the end, it can give you an extra push to go that extra 5 minutes, to go that extra repetition. Not for investing. Emotionally charged behavior in investing is almost always a bad decision. It's almost always a detriment to your decision making. And that's regardless. Excitement, anger, fear, whatever the emotion might be. If you're emotionally charged, you're probably going to end up making a poor decision. And let me give you one example. Okay, so some of you already know that prior to coming into investing, I was a professional poker player for 13 years or so. And that's an emotionally charged industry. Players get angry, players get excited, players get disappointed, players get upset. There's a lot of emotion up and down in the poker industry, right? Similar to investing, there's a lot of emotion in investing, right? When you see your stock prices gaining, you get excited, you get happy. When you see your stock price falling and your investment portfolio falling, you get disappointed, you get sad, you get upset. So the misconception is that most mistakes are made when you're angry or when you're upset, when you've lost money, that you make a big mistake, that you make bad decisions trying to get your money back. And that's partly true. There are a lot of mistakes made when investors and poker players are angry and they try to get their money back and they make bad decisions they wouldn't normally make if they were feeling at equilibrium, neither excited nor angry. But when they're angry, they might make a move that they wouldn't normally make. And that's true. But what I think people often neglect is the other side of the equation. The other side of the equation, which I think is more dangerous. I think, in my experience, what I've seen, more mistakes have been made when players have been excited and feeling like they can't do anything wrong. Imagine seeing a player after they've won 5 hands in a row, 10 hands in a row, feeling confident, feeling like they can't lose. I've seen so many bad decisions made in that state of mind when they're on a hot winning streak, up thousands of dollars, and then they say, all right, I'm going to bet it all because I feel like I can't lose. I feel hot. I feel unstoppable. I've seen more mistakes made when players were hot and on a winning streak, and those decisions have had worse consequences, believe it or not, than the bad decisions I've seen made from people that are angry when they were losing money. So right now, Nvidia stock investors are more prone to that other mistake I talked about, the mistake of feeling like you're unstoppable, you're unbeatable, because you've probably made a lot of money on your Nvidia stock investment. And now you might feel like, man, I can't miss with Nvidia. All I have to do is buy more and I'll just make more money, right? So that's the caution I will give Nvidia stock investors is coming into this stock split is to just calm down. You don't need to do anything because of the stock split. You don't need to buy, you don't need to sell. The stock split itself is no reason to do anything. So that's what I don't see enough people talking about, is to just calm down, because there's a lot of emotionally charged behavior right now, all sides of the equation, and people are not talking about that enough to just calm down. And if you're feeling emotionally charged surrounding Nvidia and the decision around Nvidia, then it's best to just not make a decision on it. Don't buy, don't sell, right? Because if you're emotionally charged, you're probably not going to make a decision based on the fundamentals of the business. You're going to make a decision based on your emotions. And so that's why you're prone to making a mistake. So it's better to just back away, let yourself calm down, and then come back to it when you're feeling more poised. And that way, whatever decision you make will be based on the facts available to you, your due diligence, and not on the emotion you're feeling at the moment. And it's hard not to feel emotion at the moment, right? Nobody is immune to that. Even as a professional poker player for 13 years, it's not like I didn't feel emotion at the poker table, or I don't feel emotion at the investing website or app or whatever. The difference is that I can identify when I'm feeling that way, and I won't make that decision. I'll walk away and I'll wait for a better moment to come back and evaluate that investment based on the characteristics of the investment and not on any emotion that I'm feeling. And the characteristics of the investment are the same before and after the stock split. There's no change to the investment of Nvidia before or after the stock split. Now, I've heard the argument of, well, because the stock is going to split, it will offer more investors the chance to buy the stock. It'll be more affordable. And yes, it will. But that's kind of like saying, if I take a cup and I take this cup of water and I put it in the ocean, there will be more water in the ocean. That's true, right? There will be more water in the ocean if I take a cup and put it in the ocean. But will it add proportionally all that much to the ocean? And no, it won't. It's not making that much of a difference. Nvidia stock is already a very liquid investment. It's very liquid. You can buy and sell Nvidia stock relatively easily in an instant, one click of a button. The added liquidity of more shareholders being able to purchase the stock is not going to add all that much to the liquidity of Nvidia. If it was another type of investment that is illiquid and difficult to sell, that would be another story. For instance, real estate. Buying or selling a home, in the US at least, is a very difficult process. It can take several months before you decide to sell the house, and when you actually sell it and have the money in your pocket. That could be a process of months with several people in between you and the buyer, or in between the buyer and the seller. You have the real estate agents, you have the mortgage company, you have the appraiser, you have the banks perhaps, you have et cetera, the inspector, all of which are taking their fees from the transaction. And at the end of the purchase, there's likely roughly 10% of the purchase price is gone for the transaction. That's an illiquid investment. If you add liquidity to that type of an investment, that will be a big help. That will be a big positive factor because it's so illiquid to begin with. But something like Nvidia stock, which is very liquid, you can buy and sell in an instant and have your money in an instant. Adding that extra liquidity is like a cup of water in the ocean. It's not that big of a deal. All right, so I hope that adds some illumination to this situation as we're in the process. Nvidia is going to trade on a split adjusted basis Monday morning, June 10th. So I hope this adds some calming effect to the market, and you can feel like you don't need to do anything because of the stock split. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.